We're perfect. All right. Sorry about that, everybody. Thanks for sticking with me. You know what happens in life is sometimes every time you add a step, it adds complexity. So there's a rule in business that the more steps you have, each additional step multiplies the complexity times 3. And so, you know, you move to a nice studio, you get the nice lights, you get the really expensive cameras, you hire professional people, and then you can't get the stupid thing to work. I was much better when I was just operating from my laptop, but, you know, trying to step it up for you guys, and that's what we get. So I apologize, but I appreciate you sticking with us. We're going to get it working good. We're going to try and do these more often. Anyway, the chat is blowing up. Thank you for joining right now. I appreciate it. We got a lot of things to talk about today, and I wanted to do it in more of a conversational type format because I have conversations about this stuff all day with people that work with me here in the office, and some other friends that I get to hop on and talk to on a pretty regular basis, and I thought I'd want to talk with you. I had some great conversations this week with some high-level people, including Jeff Booth and Luke Grauman and Corey Clipston, and we've talked about a lot of different things. And there's a lot of things going on in the world today that a lot of people maybe aren't even totally familiar with, or they're not really paying attention to. And so I want to talk about that. I like a quote. It's from one of my favorite authors, Ayn Rand. She wrote the book Atlas Shrugged, and she said that you can choose to ignore reality, but you cannot ignore the consequences of reality. So that means you can not pay attention, and that's fine. You can do that, and you'll get through life okay, but eventually reality will come up and catch you. I like to say it a little bit more aggressive, and that is that the ostrich can bury its head in the sand, but it cannot stop it from being eaten. I see Gladiator says, go ahead, Mark, give us some more FUD. I'm not exactly sure. So FUD stands for fear, uncertainty, and doubt. Well, I'm not sure if I'm going to give you some fear, but you know, there is a lot of stuff going on, that's for sure. So I'm going to talk about a couple things that are happening right now, and then we'll dig into some Q&A about this. Some of the things I've been working on. Now, you know, if you watch my channel on a regular basis, you know that I love history. And the reason why I love history is because most of us, our lifespans are short, or the amount of time that we're paying attention to these things is short. And if we're only looking at what we can see in our own peripheral, we're missing out on the bigger picture. And so as human beings, we're horrible investors. We suffer from many problems that hold us back from being successful, including things called normalcy bias. So whatever is happening now, we just think is normal. You hear a lot of people saying, when are we going back to normal? When are we going back to normal? Well, that's normalcy bias. There is no new normal. The other thing that we suffer from is what's called recency bias, and whatever's happening recently will continue on. And so both of those are problems, and the problem is that recency bias gets us because we can only see about this much. And so we have to use history to see through multiple lifetimes, multiple generations, etc. That's why I love history. Now, enough about that. So the current financial system that we have today, with the dollar, with the United States being the superpower, and the dollar being the reserve status of the world, the currency of the world, hasn't been around that long. It's been around for, you know, about 100 years or so. And it's been, ever since it was first set up, it's already been dying. And the reason why it's dying is because of the people that are in charge of it. And I don't want to say it's the people as if we could get better people. It's because people, period, humans, man, is managing it. So super quick, really quick. Gold was money for 5,000 years. Gold is final settlement. If I have the gold, I have the gold, nobody else has the gold. If I give you the gold, you have the gold, nobody else has the gold. And so that's what the purpose of money is. Money is a medium of exchange. It helps you to buy goods and services. But goods and services are things that we need to live. That's food, that's shelter, that's energy, things like that. That's what we need to live. That's true wealth. Money, gold was money. Money is just a medium of exchange. Money measures how much of those goods and services we can get. If I was on a deserted island and I had $1 million, or I had $1 billion of cash, $1 billion of gold, and $1 billion of Bitcoin, but I had no services, no goods or services to buy with that money, gold, cash, or Bitcoin, it would all be worthless. because it's the goods and services. Now, gold was money for 5,000 years, but gold is difficult to transact with because it's big, it's heavy, it's clunky, so it went to the banks, and the banks gave us these receipts. These are claims on paper. They're dollars that equaled a claim to gold, and I could always go exchange that for gold whenever I wanted. The problem is they printed too many of those. They created a bunch of fake ones. And so by 1933, they had created so many fake artificial paper claims that they shut the banks down, bank holiday. When they opened the banks back up, you weren't allowed to get your gold out of the bank. As a matter of fact, it was illegal to have gold. And so we lost trust. The banks and the government said, trust us. Put your gold in the banks. We'll give you these claims for gold. Whenever you want, you can convert them over. Trust us. But we couldn't trust them because, one, they created a bunch of fake paper claims, and two, when we wanted to get our gold, they stole it from us, so we couldn't trust them. Then, fast forward, 1944, now the government had all the gold. The entire world entered into a new monetary system called the Bretton System. And again, trust us. Trust the United States. We will keep it pegged. $35 would equal 1 ounce of gold. And in any of the nations around the world, use our dollars and give us your gold. We'll hold it for you. And anytime you want, we'll redeem it for 35 to 1. Well, the problem was the trust didn't work. And again, the United States did the same thing. They printed way too many dollars. And when nations started coming to collect their gold in the 60s, they couldn't get it anymore. President Richard Nixon shut the gold window, so basically the U.S. went bankrupt. So the trust us, we'll hold your paper dollars, or your paper dollars will be good, and trust us, we'll hold your gold. Turned out we couldn't trust them. Again, just like what happened in 1933. Since 1971, we've been off the gold standard, and we went on to what's called like a petrodollar system, where the oil now has been backing the dollar. So Saudi Arabia, you make sure that you sell all oil in dollars, and we'll provide the military to back you up. And so oil has been backing the dollar ever since, but the system is based off of trust. Now, what we found through Canada, the trucker rally and the protests, and then GoFundMe money getting stolen, and the Give Send Go money being stolen, and then people being prosecuted. Single mothers who donated $50 to a perfectly legal campaign found themselves kicked out of the financial system. We found out, wow, we can't really trust our governments or the banking system. They can kick us out. And then Russia found out, being one of 3 global superpowers with nukes, they got their bank accounts frozen and seized. And not just that, the dollar is the reserve currency of the world. But what does that even mean? The reserve currency. With the reserve, that's your savings. When you save money, which hopefully you're saving money, most people don't have savings, but you need to save some. What do you save your money in? Well, if it's in the bank, most likely it's dollars or whatever currency you're in. If you're so you save it in dollars. That's what that is. That's the reserve. Now, nations have, billions, hundreds of billions of dollars. They don't keep it in Wells Fargo or JP Morgan. They hold it in U.S. treasuries, which are basically the same as holding dollars. And then Russia just found out that their treasuries, gone, no good. So they got that taken. So now nations around the world, and Canada just told people that they can't hold dollars without them being seized if the government wants to. And now nations were just alerted that they can't hold reserves in dollars or treasuries anymore without them being taken. So what do you think is going to happen? Well, nations aren't going to hold treasuries anymore. So what are they going to do? Well, that's what we're talking about right now. So 1933, 1944, 1971, and 2022. Those are the key dates that history will talk about. I talk all the time about those dates. And now 2022 is going to be a date that we will add on to that will be talked about for years to come. Now, what's important to understand here is that wealth has always been energy. The amount of energy that we have. The United States discovered it was a new technological revolution. I talk a lot about those if you watch my channel. There's been 5 technological revolutions. Those are things that changed the course of humanity. I'm talking about the Industrial Revolution. I'm talking about steam engines and railways. I'm talking about electricity and steel. And I'm talking about 1908 oil, automobiles, and mass production. Now, since 1908, the United States discovered oil. The United States blew up. Because of the amount of energy we had, the United States economy blew up, and we were able, because we exported so many goods and services, we were receiving gold. The United States became the largest holder of gold and had about 80% of the gold at one point up to Bretton Woods. But it was always because of that oil. It was always because of the energy that we've had. But now what's going on? So the whole world's just been shaken up over the last couple of weeks, and this is what we're talking about today. So The world was just put on notice. The people of the world were put on notice. You can't keep your money in the banks. The nations of the world were just put on notice that I can't store my wealth in dollar reserves if I want to keep them from being seized or stolen. So what is going to happen? Well, the entire financial system is changing, and instantly. Now, in 1944, it was a nice, smooth, planned transition. Today, it's a disorderly transition. What we're finding is that real things, commodities, are becoming the asset to hold, which is why the entire markets are rotating. The sectors are rotating. They have been rotating for several months now out of tech-focused. Tech companies have massive growth, but they have no profits. There's nothing real there. And this rotating out of those into value, or companies that really produce goods, produce services, produce assets, and mostly commodities, have been blowing up, particularly around energy and things like that. Now, what's also interesting is that the nations, remember, the nations hold hundreds of billions of dollars of reserves. For the last several years, they have not been buying treasuries anymore. So this isn't like something that just happened immediately. As a matter of fact, it's been happening over a period of time. In the last several years, they have not been buying many treasuries, and instead they've been buying massive amounts of gold. So they've been preparing for this. All right. And then if it's not enough that we sanctioned Russia, and then they're like, well, we still have our gold. Jughead gave $5. All right, Jughead, appreciate that. Thank you. Jethro, I'm on your email list. Thanks, Jethro. Appreciate that, brother. And so then it's not enough that we're sanctioning Russia. All the private companies are sanctioning Russia. Now, U.S. senators have called for a seizing of their gold. But how's that going to happen? We're going to send over warships to Russia and we're going to take their gold forcibly? That'd be pretty interesting to see. But we did see, remember 1933, the banks stole your gold because the gold was already in the banks. Well, we saw that Venezuela had their gold stolen by the UK because it was in the UK vaults. As a matter of fact, they stole 31 tons, about $2 billion worth of gold was taken. And so if we can't trust the financial system because they can lock us out or seize our money whenever, even if we're a global superpower with nukes, we could go to gold, and gold would be great. But if you're Venezuela and you're holding gold and you put it in the vaults in UK, they steal that from you. The US is calling to steal Russia's gold. So what do we do? How does the world move forward? What does the new financial system look like in a world where there's no trust? There's no trust. So we can't trust the government or the bank. They've proven that over and over. We can't trust them to hold our dollars. We can't trust them to hold our gold. So what does each nation do? Does each nation hold their own gold? So Russia keeps their gold in Russia. China keeps their gold in China. The U.S. keeps their gold in the U.S., etc. Is that what happens? But even if that were the case, how could we trust them? Would China put up a live stream camera, 24/7 live stream on YouTube, so we could see their gold sitting there? But even then, how do we know it's not tungsten bricks that are painted gold? As a matter of fact, about a year ago, there was a big thing that came out that China, a bunch of the gold that China had was actually fake. So even if that was the case, how do we trust each nation to keep their gold and say they, have real gold and have as much as they say? And then, even if that was the case, how would they transact in a global world today? How would they transact? How could they trade? And are they going to send a warship from the United States with gold over to Britain? I mean, how much would that cost? How long would that take? It's kind of like that, like a movie about drug dealing, and it's like, give me the money, no, give me the drugs, and like, how do they trade that off? And so that's the situation that we're in now. We are going to be transitioning into a new system. We're going to talk about that. But I want to jump into a couple news stories. So this was an interesting one. I'm going to share my screen here for a second. And you can see here, this is a CNBC article that just came out yesterday. And it says, Putin wants to sell Russian gas in rubles. So they've been locked out of the financial system. Russia's been locked out of the financial system. They can't trade in dollars. However, the dollars, remember, are just money, and money isn't wealth. Money just shows us how much wealth we can buy. What's the wealth? Real goods, like energy. So Russia may not have the money, but they got the goods. They got gas, they got oil, they have a lot of other things as well. So they could just say, well, then fine, we'll sell you our oil or our gas, but in gold, or we'll sell it to you in rubles, which is their own currency, which is exactly what they've done. You can see Russian gas accounts for some 40% of Europe's total consumption. And so a lot of EU nations are saying, and as a matter of fact, the EU overall has not decided to sanction Russia's oil because they need it. It accounts for 40% of Europe's total consumption. So if they said, hey, we're not going to buy any more oil from you or energy from you, what are they going to do? They need energy. They have a massive energy crisis as it is. And we can see here that Russian accounts for 40% of their total consumption, as I said. And then the Russian ruble briefly leapt to a 3-week high past the dollar. So if we take a look at the chart here, we can see that the ruble to the US dollar has been very stable. Let me turn this little thing off. We can see how flat that's been for the last couple of years. For the last 2 years or so, it's just been really flat. But when the sanctions were announced against Russia, you can see how quickly their own currency, the ruble, sold off. But since they've decided to start selling their own assets in their own currency, look how much that currency has rebounded, which is pretty fascinating to see. So if it's real assets that matter, if it's really oil, natural gas that matter, the energy is the ability to produce wealth. Gold would be the stored wealth. Could they operate in a world without dollars? We're going to come back to that in a minute. But here's what I was saying. Unlike the United States and Britain, the EU states that have not agreed to sanctions Russia's energy sector given their dependency, because they can't. They need that. They need that to survive. Now we can see here on this story that BlackRock, so BlackRock, I'm sure everybody watching this is familiar with BlackRock and Larry Fink. They are the largest asset manager in the world. They're kind of a proxy for the United States government. They do a lot of the work that the Fed wishes they could do, but those pesky laws and regulations kind of hold them back, and so BlackRock does a lot of that for them. Larry Fink, he's somebody you should be listening to if you're trying to figure out where the world is going. He says that the Russia-Ukraine war is ending globalization. So this is something I've been talking about a lot, right? So in my 3 cycles thesis, I talk about how we're approaching peak centralization or peak globalization, same thing. So it's like a pendulum that swings back and forth. And on a 250-year cycle, we reach peak centralization. The people push back. They don't want that anymore, and it goes to decentralization. 250 years ago was the American, the French Revolution, pushing back on the centralization of the monarchy. In the United States, we set up a republic, a decentralized government. And here we are today. I've been talking a lot about this. We're at peak centralization. The whole world is being run by the World Economic Forum, the World Health Organization, the World Trade Organization, the World Meteorological Association, the UN, the IMF, etc. The world is at peak globalization, and I'm saying the pendulum is pushing back, not because of the pandemic. Pre-pandemic, there was 10 nations in the world with over 1 million people each protesting. So we're pushing back, and the pendulum is about to swing back to decentralization. And here Larry Fink is saying exactly what I've been saying. He says that the Russia-Ukraine war is ending globalization. Well, the Russia-Ukraine war is a symptom of this. It's not ending it on its own. It's because we're at the end of the cycle, and the pendulum is ready to swing back. He says here that BlackRock said Russia's invasion of Ukraine is reversing the long-running trend of globalization. Again, it's not it's not the war that's reversing it. It's war always comes at this part of the cycle. So it's not, it's more commonality, not causality, if you will. But it's still important to understand what he has to say here. He says that Russia and Ukraine war has upended the world order that has been in place since the end of the Cold War. So the end of the Cold War, remember, we've seen the pendulum just continuing to swing towards centralization. That's the world order that he's talking about, the continuation of globalization. And he says here, quote, "It has left many communities and people feeling isolated and looking inward. I believe this has exacerbated the polarization and extremist behavior we are seeing across society today." And so we're starting to see this break down. And the reason why is because of the globalization, we're all very dependent on each other. So for example, Russia has oil to sell to the world, okay? Well, if the world won't buy it from them, then what do? Well, someone's going to buy it from them, like China. So China could buy it all. But then if it's American oil companies that are producing the oil in Russia and they've now pulled out, can Russia still provide the same amount of energy to China? Even if the Russians wanted to run the oil companies, could they get the parts and equipment they need to run the oil rigs? We saw the United States said that they would stop selling microchips to Russia, But that's funny because Russia could just buy them from China, or the U.S. could stop selling them to Russia, but the U.S. can't even make them unless they get the supplies, the minerals they need from Russia. So you see how everything's connected like this. That's the globalization. But what I've been reporting is that we're seeing an end to centralization, swinging back to decentralization. That's exactly what Larry Fink is saying right here. He says, in the early 90s, when the world emerged from the Cold War, Russia was welcomed into the global financial system and given access to global capital markets. But the expansion of globalization has accelerated international trade, and it grew these markets, but now the trend is going to start reversing. Let's go back to full screen for a minute here. So what we're seeing is an end to the financial system as we know it that's led to this centralization, and now it's breaking apart, and we're moving back to decentralization, which of course I've been talking about. So what comes next? Well, remember, money is just a medium of exchange. It only allows us to buy goods and services, but the goods and services themselves are the wealth. And so it's going to come back to the way it always was, which is energy is the wealth behind every nation. So from an investment standpoint, that's where I've been putting a lot of my money. I run my own portfolio. I call it the Tactical Asset Report. Some of you watching are probably members of that community where I share all my buying and selling. We've done amazing, focusing on energy specifically. I really like uranium. I really like natural gas and oil companies. And the gold has been doing amazing for us as well. But what comes next? So like I said, we're going into a world where trust has been lost. If I can't trust the bank to hold my gold without printing a bunch of fake paper money and seizing it, if a nation can't trust to hold dollar reserves, if a nation can't trust another nation to hold their gold, how can the world work? Do we all just go back to our own little islands in our own little countries? I mean, that's one way you can look at it. Here's one more story I want to share with you, and then we'll kind of wrap this up and I'll go into some Q&A. But this one was pretty interesting. Russia also said they would accept Bitcoin to trade their energy resource. So Pavel Zavani, chairman of the State Duma Committee on Energy, announced today that the country will let allied countries pay for their oil with either their local currencies or in cryptocurrency. They said funds held in Bitcoin cannot be stopped or seized like the international community did with Russia's gold reserves. So now Russia is saying that maybe they'll allow people, or they will allow people to pay in Bitcoin for oil from their allies. So let's go back to full screen for a minute. So if we're going into a world without trust, we're going back into a commodity-based money, a couple things that I would expect to happen. One, I think it's a good thing. The reason why I think it's a good thing is that in 1944, under the Bretton Woods Agreement, there was actually two systems that were proposed. The first system was proposed by John Maynard Keynes, and it was proposed as a Bancor system. And the Bancor system was going to be a neutral reserve asset that was made up of a basket of commodities, wheat, oil, energy, things like that, precious metals. And the reason why I like that is because, remember, money is only a medium of exchange to get goods and services. Commodities are the actual goods and services. So why not have those make a basket that could be a neutral reserve asset? That's the Bancor that he proposed. However, we didn't go that route. We went to the dollar system, which of course ended. And so could we be moving back to a world of a neutral reserve asset? I think that's the case. Everybody knows that you can't trust anybody with the money. Nobody wants to trust China with it, whether you want. There's really no other currency that's a viable candidate. And so it looks like at this point the world is going back to commodities, back to real things. Now, that's interesting. That would mean that each country would then need to produce their own goods and services. I think this could be extremely bullish for the United States because right now the United States is forced to offshore send dollars out to the world, and so they've had to get rid of all their manufacturing base. Basically, the United States has to import everything in exchange for dollars. But if the U.S. doesn't have to supply the world with dollars anymore, then the U.S. would reinvest into its own infrastructure and start to produce goods and services again. So, for example, we've seen Intel start talking about making microchips in the United States again. I think there's 4 different states. I think Arizona, Ohio, Texas are going to start making chips. That's extremely bullish. Bringing industry, bringing jobs back to the United States. So I think that's good in the long term, but it fits with my thesis where I talk about where the world will start to break up. I believe by the end of the decade, we'll see the end of these giant nation states, and we will start to see much smaller states, the end of this globalization, each country kind of starting to work on their own, still having global trade. But back to the question that I've asked, in a world with no trust, how does it work? How do we trade with each other? If I can't trust somebody holding that ledger, and I can't wait for a warship to deliver gold, not to mention how long it would take and how expensive it would be, how could it work? Now, I know everyone, right? Not everyone. A lot of people are probably going, okay, this is where Mark talks about Bitcoin, and I'm going to throw it out there. If not Bitcoin, then what? It's almost like we need some sort of a decentralized ledger that nobody could control, nobody could manipulate, and that decentralized ledger could be something the whole world could use, as long as nobody can control it or manipulate it. Otherwise, what are we stuck with? We're stuck to trusting China or Russia or the US to keep the gold and keep the ledger, but as we're finding out, that trust is misplaced. So anyway, it's an interesting time to be alive. It's an interesting time. Now, what I like to say is that with this volatility, it's disaster for most people. That's what I started out with. But for those that are paying attention, it's been pretty profitable. We've been doing pretty good. So let's go ahead and jump into some questions and see what we got. Stephen Barnes says, loving the sign in the background, Mark. Oh, lighting brush fires. Thank you. That's a quote from Samuel Adams. He's one of the founding fathers. He said that it does not take a majority to prevail, but rather a small irate minority keen on setting brush fires in the minds of men. And I think that's how we win. We win by information and spreading this information. So you guys are here hanging out with me, talking to me. Hopefully you'll take this information and pass it on. And if we can keep spreading these brush fires in the minds of men, that's how we're going to win. All right. I see Jeff Greenlee says exporting jobs, inflation, and aggression are the choices the big bully the former United States has been doing for decades. Well, it was Jeff. It was what they've been doing because they were forced to because of the reserve status. So it's something called the Triffin dilemma. Go ahead and Google that Triffin dilemma, and basically it states whoever has the reserve status is going to be forced to supply the world with dollars, and it's always about trade balances, right? So easy explanation. If I made clothes and you produced food, well, I could make the food, I can make the clothes, you make the food, and we trade. But what happens if I'm giving you clothes, but I'm not giving you enough in order for the food that I need, right? So now we're running a deficit. And so there's always going to be a trade going on. So when the United States took the dollar reserve status, per the Triffin dilemma, we were forced to supply the world with oil. So we had to get rid of all of our manufacturing base so we could buy it all here. But if, Jeff, to my point, if we can get off of the dollar reserve status and into a neutral reserve asset, the U.S. can now bring all of that back. There's a lot of questions coming in. Appreciate that. Send those. I see some money's been donated in the chat revenue. I appreciate that. If you want to get your question bumped up to the top, feel free to throw in a little tip on there. It'll stand out, and I'll address that one next. Jeremiah Mathis, could you describe your multi-unit housing project in Texas? You mentioned it once last year. I do a lot of multifamily investing all over the country. I'm not sure which one you're talking about on that one specifically, but I have a couple things going on in Texas. Mike Lawrence says, did you like Luke Grauman's podcast? Mike, I did, and as a matter of fact, I said I talked to Luke Grauman this week, and as a matter of fact, Mike, thanks for bringing that up. Luke Grauman is one of my buddies. I spoke to him this week. I did like his podcast, and he will be speaking at my event coming up, which is Market Disruptors Live. Check it out, marketdisruptorslive.com. There's a link down below. We're going to be in Dallas, Texas. I'm having Luke Grauman, my good buddy George Gammon. Who else? Danielle DiMartino Booth from the Fed. I have so many other people coming to tell you what they think is going to happen over the next couple of years and what you should be doing about it. So, Mike, yes, I did like Lou Grauman's podcast. He's a good friend. He'll be on the channel, and he will be at my live event. Everyone should be checking that out, marketdisruptorslive.com. Let's see what other questions we have here. All-Nighter Hyder says, your dad says hi. Hi, Hyder. Doug says, I love Bitcoin, don't get me wrong, but I don't think these countries will give up their ability to inflate, Mark. It's too easy for them to fund all their deficits. They want to control over dollars. I would agree with you, Doug. Yeah, what nation would ever give up their ability to print money from thin air? None ever would. Of course they wouldn't. So I agree with you, Doug. They won't do that. However, we're in a serious problem. As I posed the question, in a world where nobody trusts each other, how can we do global business? That's the problem. So I agree with you, Doug. Nobody would ever willingly give that up. But how can the world work in a world when there's no trust on a global scale? That's the problem. Brock Thomas, proper way to get invested with you. One, come check out my conference, marketdisruptorslive.com. Hear from the top experts in the world. As far as I did mention that I do have a portfolio. It's called the Tactical Asset Report that I keep up. And you can join that newsletter where I share all the assets that I'm buying and selling. We keep up a full portfolio. I'll have a private community and so forth. I don't have a link on this to send to you right now. You can send an email to support@fourpillarblueprint.com and we can get you info on that. Jim Lynch, what was the take on the Harry Dent talk? Not too bullish on Bitcoin. Jim Lynch, so I think the problem with the people listening to Harry Dent is they don't understand the nuance of what he's talking about. So what do I mean by that? Okay, so I've read most of his books, and Harry Dent is right. His research is right. Everyone's like, oh, he's wrong, he's an idiot, he's been wrong for a decade. If you actually read his books and you read what he said, you would understand the nuance of it. So for example, he said that the markets would crash, which they have. If you take out all the fake Fed stimulus, the stock markets are not at their all-time highs. The economy has been going down. So when you look at the GDP growth, when you subtract out the government spending from the GDP growth, if you look at the real data, he's been correct. What most people, I don't want to say you, what most people are looking at is they're looking at, well, the stock indexes are still at all-time highs. Yeah, but if you deduct or subtract the amount of stimulus, you see a totally different picture. So what you're seeing is all-time highs, but in purchasing power, it's not there. In addition, back to the question, Jim, you asked his take on Bitcoin. He wasn't that bullish on Bitcoin in the short term, but he's bullish on the long term. So again, if you listen to it, the nuance of what he said, he did say that it's down 50%. He doesn't think it could go down another 50% from here. But then he did say it could go as low as 7,000. But then you had to listen to what he said after that. He said, but then it's going to go on to new all-time highs. He compared it to Amazon, how Amazon went from $5 to $80, and then it went back all the way to $5 before obviously going past $2,000. So he's like bearish on it in the short term, but then he's bullish on it on the long term. So the one thing that you have to figure out is in the nuance is the timing. I see. Okay, here we go. Sean Ga, you talked about shifting to HODL for transactions to leave dollar. Can you leave a link for us below? As a Canadian, can we also participate in HODL or BISC? Can we watch you Disruptor online? Okay, Sean. So I think probably a separate video I talked about if you wanted to buy or sell Bitcoin without going through a KYC, a Know Your Customer exchange, you could use BISC, B-I-S-Q, or HODL. HODL, it's H-O-D-L. So you just Google either of those, HODL, or BISQ. And those are platforms that you could buy and sell Bitcoin, gift cards, etc., without going through a regulated exchange. As far as the Market Disruptors event that I'm hosting with Luke Grauman and George Gammon and so many others, with the general admission ticket, you can either join in person or you can watch it live online. JD Birch says the barter system. So yeah, kind of like a barter system, but the problem is that barter system doesn't work because it really limits the amount of trade that we have. And so the reason why we have money is so that we don't have to trust each other. So for example, if you're a store and you provide a good or service, I have to trust you. I have to know you. I have to know your reputation. I have to believe that you're going to provide the good or the service that I purchased, but you don't have to know me. Because as soon as I give you that money, you deliver me the good or the service, I don't have to know you. So money takes the place of that. I mean, we shouldn't need the barter system. Jeff Wackerly, what small biz will do good in a recession? It depends on the recession that we have, and it depends on what type of business. I mean, there's lots of them that could do good. So, for example, one of my buddies owns a restoration business. So he fixes up houses when they've had floods or when they have fires. And his customers are insurance companies. So if your house burns up or it floods, you call your insurance company. And he gets all his jobs from insurance companies. That's pretty recession proof, because even in a recession, if your house burns down, the insurance company's going to pay to do that. Other things would be, think about things that people would still buy in a recession. So maybe high-end splurges might go away, but there's still probably lots of basic goods and necessities that people are still going to need even in a recession. So you could think about that. If I was investing, you could think about, stock for Costco and Walmart and things like that, places that will probably do even better in a recession. John Candle Wick says, what do you think it will happen if Bitcoin starts to be accepted as a medium of exchange for energy? USA might intervene by putting pressure on exchanges, but the exchanges will lose clients. So John Candle Wick, so a lot of times people are trying to look at a new potential system through the lens of the existing system that we're in. And then they don't see it being compatible. So you mentioned the word trading Bitcoin for energy, but then you use the word exchange. So now you're like trying to take two different systems. If I want to pay you directly with Bitcoin, nobody can stop that or block that or prevent it. It's peer-to-peer. If a nation wanted to buy energy from Russia with Bitcoin, peer-to-peer, nobody can stop that or prevent that. You're talking about an exchange where I might want to exchange my fiat for Bitcoin or my Bitcoin for fiat. I'm not talking about that. So you're trying to merge two systems. So maybe that clears it up. Sherry Shear says, no one trusts anyone else. Our country had the best idea, in God we trust. Yeah, I would agree. I think most people would agree that even if you don't believe in God, having a shared sense of morals is definitely better than having this moral relativism that we're in today, where there's just no truth at all. Jeff Greenlee says, by the way, global aggression and empire building is the choice of the oligarchs. They don't care about the people. Read Confessions of an Economic Hitman. Yep, you're right. Dante3X says that Harry Dent is a clown. I'd love to hear why. He's written like 5 books with some of the most amazing research I've ever seen. I'd love to hear you maybe discredit any single one of the points that he's made. So I'd love to hear that. Wealth engineering, let's see. How much of your portfolio is invested into crypto? About probably more than half. Just going through the questions here. There's a lot. Like I said, if you want to make it stand out, feel free to throw a tip in there. All right, here's one. It's a statement, but it takes a massive amount of electricity to operate the Bitcoin system. Given this, is it able to grow? So it does take a massive amount of electricity. You know what else takes a lot of electricity? YouTube. As a matter of fact, YouTube takes way more electricity than Bitcoin. You know what else takes more electricity than Bitcoin? Clothes dryers. Do we need clothes dryers? Why not just hang your clothes in the backyard? You know what else takes more electricity than Bitcoin? Banks. So yeah, it takes a lot of energy. So do a lot of other things. I don't know what that has to do with anything. Using energy is good. As I made the case earlier in the video, the wealth of a nation has always come from the energy they've had. We bring people out of poverty by providing cheap, abundant energy. The world is habitable. We're able to live in this world because of our use of energy. Without energy, we die. It's too hot, it's too cold, we have floods, we have famines. It's only through the use of energy we've been able to manipulate the world into something that we can live. And so yes, Bitcoin uses energy, and that's a good thing. But it uses less energy than YouTube. They were clothes dryers. Jamie Valdez says that Harry Dent has been wrong for more than 10 years. He will be right someday, but he has missed some great profits. Jamie, I don't agree. So I can tell you personally, again, I've read his books and I've been subscribed to his newsletter for maybe close to a decade, 6-7 years at least. And I can tell you that the portfolio that he puts forth in his newsletter has done extremely well. And back to the point about the markets crashing, technically the economy has started crashing, but I would agree, Jamie. I'm not his biggest fanboy here. Everybody makes mistakes. The one thing that he's done, and I asked him in the interview, I said a lot of people would say that you're the broken clock. That'd be wrong eventually. And I said, would you say that you've underestimated what the central bankers have been able to do? And he said yes. So that's one thing that he's gotten wrong. The research that he's done is right, but been following his newsletter, and he's made a lot of money in there. IJB, cheers. You don't have a question, but I appreciate the tip, man. Un flatista, how would this affect the digital dollar? Well, we already have a digital dollar. So about, I think, over 80% of all US dollar transactions are already digital. I don't even really ever carry cash. I only have cash if someone gives it to me. I do everything off my debit card. So we already have digital. It's all wire transfers and Visa payments and debit cards. So we already have the digital dollar. Luis Betancourt wants to know, if the financial system moved to a system like Bitcoin, how would credit work? Well, credit is supposed to work from saved money. So here's how it works, is I consume less than I produce, so I save. And then of my saved resources, I can loan them out. So that's exactly how it would work. In a financial system based off Bitcoin, people would save money and then they would loan it out, just like they did for 5,000 years off the gold system. So that's how it would work. Oh, we got a big tip. Don DiCaio says a $99 tip to start your transition from Windows to Mac. Very funny, Don. Very funny. I like that. True story. My camera operator on the other side of the screen is working off of a Mac. Yeah, I'm just still old school, work on a PC. You know, people say that Macs are easier to use, but they're not easier for me because I've been using a PC for so long. Funny though, but I appreciate that, Don. Thank you. Candy says, what do you think of Buckminster Fulster? He was good. Fuller, he said a lot of good things. He was good. Brock Thomas says, old school, how do you do tips? That's a good question, Brock Thomas. I'm not actually sure. I think there should just be a little button right there. Doug says, Greg Manarino says silver is the most undervalued asset. Do you agree? Well, Doug, the problem I have with that is I like Greg Manarino. I like his work. So we have a fundamental reason for gold. As I made the case earlier, governments around the world have been net buyers of gold. We understand why they're buying gold. But why would anybody buy silver? All right, now silver is used for industrial uses. About 80% of silver production is used for industrial uses. So most of its price is from its use. Gold's price is not from its use. It has a monetary premium. So I understand the fundamental reasons. I understand the fundamental drivers of gold, but I don't understand them for silver. The reason why people like silver, probably I'm guessing like Greg Manarino, not to put words in his mouth, but you look at the historical gold to silver ratio. It was for all of history, it was 15 to 1, and at some point it's going to come back to 15 to 1, and because of that, it's going to come back, okay? But that's speculation to me. So maybe, I don't know what his reason is, but for me, you know, I think that silver was demonetized. Silver, when we went into a paper gold system, we didn't need silver anymore. That's why it was demonetized. I mean, it doesn't have any fundamental use or reason. It's used for industrial uses, don't get me wrong. We need it. We need lots of it. And we're only going to need to continue to need more of silver because as we move to more solar panels, things like that, we'll need more of it. But as far as it being undervalued and getting this massive monetary premium, I'm just not sure about that. But it is more volatile, and I do buy some silver mining stocks, so I still do like silver mining stocks. Blue Waters said you got your daughter and hubby to invest in Bitcoin. Good job, Blue Waters. Bitcoin African thing asked what I think about XRP. I don't think a lot about it. So Gen X noob, you're not getting it when we say digital dollar, when it's a crypto wallet. Trust me, I get it. I've probably done 20 or 30 videos talking about crypto or central bank digital currencies. So of course I get it. I would imagine I get it better than most people. I teach about it. I talk about it all the time. Of course I understand central bank digital currencies. Like I said, dozens of videos about it. Yeah, it's programmable money, which means they could say, hey, we'll give you money if you don't spend it by Friday. It comes back to us. You can spend it here. You can't spend it here. It's behavioral modification. So, hey, if you don't save enough, we'll give you a positive interest rate. You spend too much, or you save too much, we have a negative interest rate. Sure, I get that. And so a central bank digital currency is much different than a digital dollar that we might have today. So Gen X noob, if that's what you're talking about, yes, for sure. It's a scary thing, to be honest. In my opinion, the goal of the globalists is to push us into a social credit score type system. And in order to complete that system, they have to have a central bank digital currency. So that CBDC is a very, very crucial piece to getting that central bank or that social credit score system in place. Yosef says, thoughts on World War III, biothreats, and crisis management. So my thoughts on World War III, I would say my thoughts are that I think we're already in World War III. And World War III is not what a lot of people are expecting, where they're expecting World War III to be where a war breaks out with Russia and the US and China and the whole world going to war together and there's nuclear weapons and all of those things. And I don't think that's the case. I think World War III is the governments against the people, and we're seeing that over the last 2 years. All the governments of the world have worked in concert, in coordination to lock the people down. They're trying to rush in these digital surveillance systems as fast as possible. We're talking about payment and movement gateways, you know, like your phones when you have to show that app in order to get inside of certain places or countries in. And the central bank digital currency will be that final piece of that. So I think we're already in a World War III. I think it's the people versus the governments. I think it's a war over information and money, which is why I make as much content as I do, trying to win that war of information. Like my picture says back there, lighting brush fires in the minds of men. As far as biothreats and crisis management, I think the governments will continue to use safety to push us into where they want. Imagine if I was moving, if I was herding cattle or sheep across a countryside, my goal would be to get it into a pen over here. And I'd have to prod a little bit here, and prod a little bit here, and push a little bit there, push a little bit here, until I finally get them there. And so if the goal is for them to get us into this central bank digital currency system, they have to continue to prod and push us with a bunch of different scare tactics in order to get us there. So sure, more bio threats, sure, more cybersecurity threats, all of those things I think will continue to happen. By the way, if you haven't already considered, you need to be coming to my live event, marketdisruptorslive.com. There's a link down below. I got like 15 of the experts all around the world to come and talk to you about two things: what they think is going to happen over the next couple of years, and most importantly, what you should be doing about it. Some great minds, including we talked about Luke Grauman earlier. He's been nailing this, so Luke Grauman will be there. Daniel DiMartino Booth, who's a Fed insider, will be there. My good buddy George Gammon will be there. I got Greg Foss, I got Jeff Booth, I got Robert Breedlove, and so many others. Joe Brown from Heresy. If you guys like that channel, Heresy, he's going to be there. I'd love to meet you. All I ever see is this camera. I'd love to see you from the other side, shake your hand. It'd be great to come hang out. There's a link down below, marketdisruptorslive.com, or there's a link pinned here in the chat. Let's see what else we got. Robert Hurley, $10. Thanks, Robert. Top crypto picks other than Bitcoin. Thoughts on the privacy cryptos, ARR, XMR. So Robert, I wrote a cryptocurrency research newsletter for 4 years, from 2016 to 2019. During that time, I personally researched and published over 1,000 pages of research on crypto projects. I did research onto all the privacy coins, all the decentralized exchanges, etc. My views just changed in 2019. I decided to stop writing that newsletter, and I still write an investment newsletter. It's just a little bit more broad than just cryptocurrency, although it does still include cryptocurrency as well. My thoughts on these privacy coins like ARR, XMR, or whatever, is that I don't think they're really needed anymore. I think they're a great idea, but at the time when I was doing a lot of research onto them, I thought they'd be the next big thing, but I missed a piece of how technology works, and in order, you have to, to understand Bitcoin is very difficult. You have to understand a bunch of different disciplines, and so one of them is money. What is money? So money has to have key attributes. It has to be portable. So gold's tough because it's not super portable. Little bits are. It needs to be divisible. Gold's good for that, divisible. It needs to be durable, right? It can't like bananas would be horrible because they'd go bad. But one of the biggest pieces of money is it has to be saleable. People have to accept it. It needs to be liquid. And so you can have the best privacy coin in the world, but if you can't find anybody to take it from you, what good does it do? Bitcoin can be used anywhere in the world. You can find someone to take your Bitcoin. And so you just can't do that with XYZ privacy coin. The other thing with privacy coins is that what happens is they've made trade-offs in order to get the privacy. And the way technology works is that as you scale up in layers, you can make trade-offs, but you don't make a trade-off on the base layer. So with Bitcoin, we have, it's anonymous, but it's not private, but it's anonymous. Now, if I don't go in and out of fiat gateways that capture my ID, I don't have to worry about it. So in El Salvador, I've been working with people in El Salvador. They get paid in Bitcoin without ever putting their name or information into any exchange or the internet. They get paid in Bitcoin and they spend in Bitcoin. So there's no way anybody could trace who they are because they've never put their name in the internet. So in a true Bitcoin world, without that, you don't need it. But back to the privacy coins. So they need to be saleable. They're not saleable. But the other thing is that with Bitcoin, I can already obfuscate or hide the history. Privacy coins don't have a history. Now, a lot of people would say, well, privacy coins are more fungible because a merchant could say they won't take this Bitcoin because it has this history on it, right? Well, I could delete the history. Well, then they would say, well, then they can't take a Bitcoin without a history. Then I would say, well, then why can't they take a privacy coin without a history? Interesting, right? The other thing I'd say is that we scale up in layers and we make trade-offs on layers. So I can use layer 2. For example, I could transact over Lightning and I could be more private than any privacy coin. So for those reasons, I'm just not as bullish on them as I used to be. But thanks for the tip, Robert. Appreciate that. Ooh, we got a $20 one. 3R Sullivan. In a Bitcoin world, how many Satoshis do you think a gallon of milk would cost? What is the dollar basis for the divisibility of one Bitcoin for everyday products? So here's how it works. We have, remember, wealth is not money. Money measures wealth, right? Wealth is goods and services. So you take all the goods and services of the world divided by all the money of the world. That's it. The problem is when you continually increase the money supply, we have more money chasing the same amount of goods and services, it pushes the price of the goods and services up. But what if we didn't increase the money supply? But we did increase the goods and services. That means if we push the goods and services up without increasing the money supply, the value would accrue in the money, not the assets. What does that mean? Well, that means that, let's say that, I don't know, but let's say hypothetically, I believe in 1970, a cup of coffee was like 10 cents. Today, a cup of coffee, depending on where you go, is going to be $2 to $4, right? Don't you think in the last 40 years, with all the technology we have, that getting a coffee bean from Colombia to my coffee cup would be easier and faster and cheaper? Shouldn't a cup of coffee gone from 10 cents to 2 cents, not 10 cents to $2? And that's the problem with the inflationary monetary system that we have. But under a Bitcoin standard, to your point, 3R Sullivan, the milk would be getting cheaper and cheaper and cheaper because technology enables us to make more milk and transport the milk for cheaper. And so milk should be getting cheaper. All our lives should be getting easier. I should be working less, not more. Hopefully that helps. Thanks for the tip. Kevin Opar. You did a great job with Mike Tyson interview. Thank you. It wasn't an easy interview. He was kind of loaded, to be honest with you. Have you ever tried surfing on a hydrofoil? Kevin, I have not. I have a lot of friends that do. I know there's a steep learning curve and it's kind of dangerous. And man, it's something I want to do. I just haven't done it yet. One day I will. Kevin, thank you. Arthur Begin, $20 tip. Appreciate that. Love everything you do, Mark. I watch every video. You and Gammon are who I watch for the news. I trust what you guys do. Thanks, Arthur. I appreciate that. Then come hang out with George and myself at marketdisruptorslive.com. Hang out, have dinner with us, shake our hand, take your picture, build some relationships. You know, that's the key piece here. You need to build relationships. So Arthur, I appreciate that. George is a good buddy. We spend a lot of time together, and I'd love for you to come hang out, meet us, meet George Gammon, meet Luke Grauman and Daniel DiMartino Booth, and so forth. Carrie Johnson tipped $10. Thank you, Carrie. I have learned so much from you. My sincerest gratitude. I wish I could afford your events. You're an amazing soul. Thank you, Mark. Big love to you and your family. Thank you, Carrie. I appreciate that. Crypto Clarity says, what's the easiest way for me to get exposure to solar? I'm not sure what you mean to solar, like to invest into solar companies. I mean, if that's what you're talking about, I mean, you can just find, you know, which are the largest manufacturers of solar equipment. It depends on what angle you like to play. A lot of times what I like to try and do is, like, instead of trying to pick winners, like, for example, rather than trying to pick Tesla or the next Tesla, I would say, well, what do all electric vehicles need? Because, like, we know EV vehicles is going to be a big trend, but will Tesla be the big one? Will other ones come and replace it? Well, they all need batteries, and they all need lithium. So how about I buy lithium, and regardless of which manufacturer wins? And so back to solar, one of the best ways to play solar, in my opinion, would be to think the same way, not try to find the individual solar manufacturer, but to go, what do they all need? Well, they all need copper wires, so I'll play copper. Or I'll play silver. They all need silver, right? So that's how I would probably get exposure to solar. Shaolin 015 says, coming from China, I can't see the West accepting a social credit score like China. Shaolin, I would also say the same thing, except for look how quickly they were to rush putting a passport in to show your health certificate everywhere. So, you know, scare people enough and they'll jump into whatever, I guess. No Fame Club says, what search engine do you use? I use DuckDuckGo. Lot Phi Ken says, I smell bit pawns scam pumping. I'm guessing you're referring to Bitcoin being a Ponzi. That's a great comment. Thanks for leaving that. I would just ask you to kind of think through what you say before you say it. Do you know what a Ponzi scheme is? What I would do is encourage you to look up what the SEC's definition of a Ponzi scheme is. So a Ponzi scheme would be something that new money coming in goes to pay old money out. The SEC actually gives what they call red flags so you can represent a Ponzi scheme. One of those red flags would be that the promoter, there's a promoter, first of all. Second, that the promoter has a very complex strategy so you can't understand it. Does Bitcoin have a promoter? There's no head, there's no company. Is there a complex scheme? It's open source. The other thing is that the SEC would say the red flag is to watch out for unrealistic returns. Does Bitcoin promise any returns? So what I would say, and again, the money has to come in to replace the old people. So Bitcoin is about as much of a Ponzi scheme as gold is, right? So gold, I guess you could say gold is too, right? Now, technically, if no one else buys Bitcoin, the price will go down, just like if nobody bought gold, just like if nobody bought oil. So that's what an asset is. Now, what would be considered a Ponzi scheme? The dollar. The dollar would be considered a Ponzi scheme. Biden said it himself. Biden said, the U.S. never defaults on our debt. You don't understand. We've never defaulted on our debt, but we need to take on this new debt in order to pay the old debt. That's the definition of a Ponzi. So anyway, think through what you say before you say it. Maybe do a little research. It'll help you out. Doug says, if Bitcoin is a deflationary asset, why would anyone use their Bitcoin instead of just holding it? If they spend it, they lose their deflationary asset. Wouldn't everyone be incentivized to hold it? Well, Doug, for now, yes, we would want to spend dollars, fiat, which is an inflationary asset, and save in a deflationary asset, of course. Now, eventually, let's say that in a world where there was no fiat to spend and we were holding Bitcoin that was a deflationary asset, why would we spend it? Well, let's see, because we're still going to need food, and we're still going to need clothes, and we're still going to want to go on a vacation, and we're still going to want a car, right? So we're still going to want to spend money. Now, we would spend a lot less money because we wouldn't be buying a bunch of junk we don't need. We'd probably be thinking twice before we spent money. But for now, sure, spend your fiat money, save in your deflationary money. Hyder says, World War III began no later than '08. It's just more noticeable now. Tyler Davidson says, do you think now is still a good time to buy rental properties? Do you think it's a good hedge versus inflation, great reset, etc.? So I like to say that there is no such thing as the real estate market. There is thousands of real estate markets broken down by location and price and type and sector and all those different things. So I wouldn't throw a blanket statement on that. What I would say is that we're going through what's called the Great Migration. And there's pockets that are going to outperform others. So for example, around Lake Travis outside of Austin, Texas, in the last year, homes went up 150%, but in some areas they went down. For example, rents went up 60% in a couple states last year, but some cities, they actually went down. And so not all rentals will do good, but if you're in a good long-term demand area, specifically the Sun Belt states, Texas, Arizona, Texas, Tennessee, Florida, etc., I think they'll do pretty good. If you can lock in, interest rates have gone up quite a bit. I think they're about 4.25% today, but even still, if you can lock in 30-year debt at 4.25%, I think it's a pretty good deal. I mean, do you think inflation will be more than that or less than that over the next 30 years? And so I think it's still a pretty good deal, but it's not a blanket statement. I mean, it's there's nuance to that. Shamoan, $50 tip, thank you. Canadian real estate is going through a heightened focus again from the government. As the ugly head of taxation on principal residences slowly peers out, the interest rates increase. Do you see real estate being a strong investment strategy to hedge? So I think that real estate has been one of the best investments for like the last 50 years. I do not think it will be one of the best investments for the next 50 years. And when I say that, there's nuance to that. I don't think we'll see the big appreciation that we saw in the past. I think it'll still be great for like cash flow type investments. So I love cash flow. I think everybody should be investing for cash flow. Buy some to earn the cash flow. But if you're buying it in order to get this massive appreciation, I probably wouldn't expect that. The reason why is over the last 50 years, we had the baby boomer generation accelerate into society and start buying up all the homes. We had a massive shortage of homes. At the same time, we saw interest rates go from 15% down to 3%. And so those interest rates going from 15% to 3%, in addition to the massive demand, supply and demand, led to this massive boom. The problem is now we don't have the people to buy the homes. The homes are too expensive, and interest rates being at 3 or 4%, how much lower can they go? So I don't see the same situation moving forward that we had in the past. However, I still think it's going to be an amazing place to put money and earn cash yield on. Jughead says, I asked a question regarding purchasing silver earlier. Would it be possible to answer, please? Love and respect from the UK. Jughead, I wish you would have put it in this one, because then I would see the question. I'm not sure what your question was. There's so many. Dan, if you see a question from Jughead1, maybe let me know what it says. Jughead, I'm going to have Dan look it up and see if we can find it. Sorry about that, brother. By the way, I'm here telling you about my event, marketdisruptorslive.com. I'm bringing this together. We're going after the Federal Reserve. We're going to have it in Dallas, Texas, the place where JFK, the last president that went against the Federal Reserve, got shot. And we're going to take it right back to that place, and we're going to talk about ending the Fed. I'm going to bring about 15 of some of the best speakers in the world to explain what they think is going to happen, and most importantly, what you should be doing about it. The first day is going to be workshops, so deep dive workshops. And we're going to have Cody Sanchez come and talk about building cash flow. She is amazing, and if you want to figure out how to build additional cash flow, you want to increase your income or stop working or change your career, you need to check out Cody Sanchez. I have Jason Hartman coming to talk about real estate. I have a strategy where you can take a one-time investment in real estate, and in less than 10 years you could be retired. We're going to talk about that, an actual workshop how to do that. I want to talk to you about asset protection and tax management. If you want to figure out how to get your taxes down to almost zero, specifically if you make more than $100,000 a year, you do not want to miss this tax workshop. So that's 3 days of deep dive. And then we have 2 days of speakers. Like I said, Luke Grauman, George Gammon, Danielle DiMartino Booth, Greg Foss, Jeff Booth, Robert Breedlove, myself. It's going to be amazing. You don't want to miss that. Oh, Dr. Joe Mercola, my good buddy. Talk about your health. Your health is wealth. Don't miss that. Mike Lawrence, thoughts on upcoming food crisis? Yeah, I mean, I've done a lot of videos on the energy crisis and the food crisis. It's obviously here. Between Russia and Ukraine, they control about 30% of the world's wheat and corn. I believe it's about 12% of the world's calories. In Ukraine, with the war, they're missing the whole spring plant. That's going to be a big problem. And on top of that, Russia also supplies a good majority of the world's fertilizer. And of course, what do you need fertilizer for? Oh yeah, to make food. So we're going to definitely have that. I think in some of the richer countries like the United States, we're going to see a lot higher prices. We'll be okay. But some of the countries like in the East, like Egypt, and those countries are going to really suffer. And they could have an Arab Spring 2.0 on their hands, meaning that's what led to the last real big uprising. Humans can take almost any kind of punishment, but when you can't eat or you can't feed your family, that's when gloves come off, right? So I think we're already seeing a food crisis, meaning prices going higher. But even if we had a magic wand right now, we can't just fix all the problems that we've created. It's going to take a year or two to work them out. And so get prepared for having higher prices moving forward. Chris Topper says, you did an energy crisis video that took 2 years to come into fruition. I mean, kind of. It was incremental, and the whole point is you're supposed to get into position before it happens, not after. What's your time frame on a food crisis? It's already happening. And how badly will America be affected? I already kind of answered that. In the U.S., I think just as long as you have money, expect a lot higher prices. It won't be deadly, I don't think, like other places. Chris Topper says you asked a question and made a donation. I didn't see it. Dan, can you see if you can find a message from Chris Topper?
Yeah, I asked a question.
I know you're still looking for that other one.
Yeah, the other one, he only made one post. Looks like.
Don Daikayo, will there be a way to attend virtually? Yeah, there is. So marketdisruptorslive.com. If you can't make it in person, you can attend virtually. With the general admission ticket, you get either access. So you can definitely check that out either way, Don. Appreciate the tip, and hopefully if you can't make it in person, which everyone should try to make it in person, it is worth the money, it's worth the hassle, it's worth the effort, because you need to be meeting like-minded people. You need to be able to have conversations with people like myself and George Gammon and Luke Grauman, and so you want to be there for that. But if you can't make it, definitely video is better than nothing.
There's Chris Topper, Slack.
Where'd you put it, in Slack?
Yes.
Okay. What is it? Yeah, that was the new one. Chris, sorry, I can't find your previous question. If you ask it again, we'll keep an eye out for it. Brock Thomas, tickets, question mark. Yeah, just go to marketdisruptorslive.com and you'll find the information for the tickets there. KSRR Rider says, if you buy farmland, you never own it. You always have to pay your taxes. You're right, KSSR Rider, you're right. Technically, you never really own the land. The government owns the land. Whatever nation that you're in, you pay taxes on it, and that's the way it is. So you're absolutely right, and that's the system that we're in. Michael Champagne says that Harry Dent, he's talking about, argues that all assets are bubble and will crash, ignores differing fundamentals of various asset classes coupled with massive currency creation. So what I would say to that, Michael, is that Harry Dent, if you watch the full interview, he said at the end, you need to come and see a full presentation with all the slides and all the graphs to understand all the nuance. So if you've read one of his books, like I said, there's a ton of nuance here. So you might be generalizing a little bit. But what I would say is that when markets crash, so there's two ways that the market can crash. You can have an inflationary bust or you can have a deflationary bust. So Weimar Republic, Germany, or Venezuela, those are inflationary busts. Prices go up so fast, the money becomes so worthless that it crashes. You can't buy anything, but prices went up, they didn't crash. Harry Dent calls for a deflationary crash where he thinks the market could drop 80 or 90%. And so there's two, people are in different camps. Will there be an inflationary or will there be a deflationary crash? Which way will it go? I tend to be in more of the inflationary camp. He's in the deflationary camp. Now, in a deflationary crash, look at 2008, look at March 2020. When it crashes, to your point, Michael, everything crashes. So gold went down, Bitcoin went down, stocks went down, everything goes down together. It's what happens after that, I think, is the question. So you said that he argues that ignores differing fundamentals of various asset classes coupled with massive currency creation. So all of the asset classes crash. Now, some of them, like gold and Bitcoin, bounce back really fast and go on to make new all-time highs when the stock doesn't. But I think that's probably where the nuance is, maybe, Michael? You got another one on Slack? Jughead. Okay, Jughead, I found your question, my silver question. I've been purchasing silver coins and Ignats monthly since June 2021. What is your assessment of this as a defense against hyperinflation? So a couple things, Jughead. Owning physical gold and silver, like coins like you're talking about, I mean, if you believe in a Mad Max end of the world scenario where like the whole world is a war zone and there's no internet and there's no banks and I need silver to go barter, then, you know, maybe it makes sense to hold physical. As far as I talked earlier about gold and silver, gold, I can give fundamental reasons why gold should be valued higher. I could give mathematical fundamental reasons why gold should be valued at 50,000 an ounce or $85,000 an ounce. If you take the amount of gold the United States has divided by the amount of currencies out there and you redivided it, it's about $85,000 an ounce. I can give you that. But what is the fundamental reason for silver? I don't know. There is none. And the reason why is because gold and silver used to work together because silver was more divisible, right? So gold was good for big purchases, silver was good for small purchases. But when we got paper gold certificates, we didn't need silver anymore, and silver was demonetized. Silver is not money, so silver doesn't carry a monetary premium like gold does. And so I have no fundamental calculation to figure out what silver should be valued at. Now, what people do is they speculate and they say, well, it's based off of the ratio, the gold-silver ratio. Historically, it's been 15 to 1. I'm not sure what it's at right now, but eventually it's going to snap back to where it was. And so if it snaps back to a historical level of 15 to 1, then I can make a lot of money. So that's like a speculative thing. Like they're basically using gold to figure out where it could go and then trying to speculate as to where silver could go based off of that. Trying to pull up the gold to silver ratio. Here we go. So Dan, open up my screen here for a second. So here's the gold silver ratio right here. Are they showing my screen, Dan?
Yes.
Yeah. So you can see like historically, right? If I put on like a log scale, maybe see a little bit better. What we can see, right, it was like 1919, 17 to 1. It got up to 97 to 1. It got down to 20 here. And you can see here's like 2008 when it shot way higher, 70 to 1. And then right here, people were like, ooh, it's what was it at 100? Let me zoom in a little bit more on that. So right here, we saw this high of like 115 right after the crash in March of 2020. So we got that crash at 115. If I could buy it at 115 and hold it till it got back to 15, then I could make a lot of money. But why would it ever go back to 15? I think if anything, maybe it gets back to 50 or 60. But again, that's just a guess. That's a speculative guess. I don't see it getting back down into this $15, $20 level, maybe ever again. But I don't know. I don't have a crystal ball. I'm just not playing it based off of that. But just know it's speculative. All right, Dan, I'm done sharing my screen. Shamoan says, here's a tip. Here's some more worthless fiat currency. Thanks, Shamoan. I'll take it because you know why? I'm still going to spend it. Deborah, $20. Thanks, Mark. Appreciate you. Thanks, Deborah. Appreciate that. Gregory, $20. My only concern with Bitcoin is how it plays out if Klaus is to believed with his cyber attack taking down the global energy grids. Your thoughts? So, I guess you're afraid that Klaus or somebody could do a cyber attack and take down the global energy grid. So, do you think? And let me ask you this. Again, we don't want to think in terms of black and whites. There's no such thing. There's no such thing as 100% guarantee. Aliens could come back and destroy the world tomorrow. It's not likely. And as a matter of fact, the probability of that happening is very, very low. I mean, it's barely above 0%, but it could happen, right? Now, what is the probability that all of the electricity in the whole world goes out at the same time and it stays down forever? I mean, barely over 0. We know how to make electricity. I got a generator at my house. I'll just turn it on. I can create electricity. I got solar panels. Like, I don't see how they could shut off all the electricity of the world at the same time. Now, they could take down a region. So let's say that like your city, we could knock out your city. Maybe we could even knock out part of your state at one time. But so what? Bitcoin is a decentralized database. There's databases all over the world. They'd have to take the whole world out at the same time. But even if they did, computers don't lose their data when they get turned off. So when the electricity comes back on, all the database is still there. So I don't see that as a very big risk. I'm not really worried about it. We can send Bitcoin over mesh networks, over ham radios. There's satellites in space now, and on and on and on. But thanks for the question, and thanks for the tip. I appreciate that. Hopefully that was a good enough answer for you. I just don't think it's something I'm really worried about. The probability of that happening is so slim. I think there's not a lot of other attack vectors I can think of, and these are exercises that I do on a regular basis, but that's not really one that I'm worried about. Dale Johnson says, should I sell half my crypto to pay my mortgage off before interest hikes come into play? I only owe $84,000, but I'm a single dad with 4 kids. I want to make the right decision for them and their future. So Dale, what I would try and do is just, if it sounds like your mortgage is an adjustable rate mortgage, I would try to lock that into a fixed rate mortgage. So I don't think you need to sell your crypto to do that. Just refinance it and just convert it into a fixed rate, and then just keep your crypto. That's what I would probably suggest. I don't know your full situation, but I think that's probably a pretty good option. SE says, can you elaborate on how you see the US dollar losing reserve status, how the petrodollar system will be threatened by China, Russia, and how the US will respond? So the dollar is losing its reserve status. It's happening. It's a process that happens over a long period of time. So for example, when the dollar took over the reserve status of the pound sterling, it took about 30 years. So the dollar used to be about 80% of global trade. Today it's just above 50%. So it's already losing its status of reserve. Now, as I talked about, where nations aren't going to want to save or store their reserves in dollars anymore. So it's going to continue to lose its reserve status. It continues. It's a process. Give it 30 or 40 years. It's not like a overnight situation. Sean Gaw says, first, how can you start transaction between U.S. through El Salvador? Second, have you thought of creating a credit card app where we contribute $1 transact? I'm not sure what that means. Let's see. So first, how can you start a transaction between U.S. through El Salvador? A transaction. So, I mean, if someone's in El Salvador and I'm here, I mean, I can send them Bitcoin instantly and free. And it doesn't matter if they're in El Salvador or literally sitting on the table next to me. It wouldn't really matter. If that's what you mean, a transaction between us and El Salvador. And second, have you thought of creating a credit card app where you contribute $1 to transact? I'm not really sure what that means. There's a bunch of credit card apps that can run off your credit card or off your cryptocurrencies, for example. I mean, dozens of them. I'm not going to name them all. Crypto.com is an easy one to use. I think BlockFi has a credit card. Fodal has a credit card. So there's a bunch of options that you can do with that. Unflatista, your thoughts on the thorium reactor tech being denied to the public? Yeah, the thorium reactor tech is very interesting. I'm not an expert in it by any means. It's something I have read into quite a bit though. And so basically the idea is having these small nuclear reactors that run off of like a salt. And I like the idea of the mini nuclear reactors, a mini nuclear reactor that could power, a city or a county. That way, if something were to go wrong, which I don't see that as being a big risk anymore. Technology's come a long way. But if you had smaller reactors and heaven forbid there was a problem, it would only affect a small area versus a big reactor affecting a big one. So I think the thorium reactors look very interesting. Again, I'm not an expert in that. As far as it being denied to the public, I don't know about that. I know overall the public isn't into like nuclear reactors. So like in California where I'm at, for example, there were 3. They've already shut 2 of them down and they're still trying to shut the third one down. In Germany, they've been shutting all their nuclear reactors down, which is why Germany has the highest energy prices in Europe. And so I think the sentiment of nuclear reactors is changing. I think that's going to continue to be a trend. And if that happens, then the thorium reactors, I'm sure, will probably catch up from there. Ace's Cafe, thanks for the tip. No question, but appreciate that. Kurt Weber. Mark, mortgage interest rates just reached above 4%, a 1% jump in about a month. Do you think the real estate industry is in a bubble and will pop? So, Kurt, everything's in a bubble. Everything. It's just, is the bubble here or is the bubble here? Where's the bubble? Everything's in a bubble. Now, home prices have never been higher, right? Right? Or no? Well, let's see. So real estate priced in US dollars have never been higher, but they just created a bunch of dollars that changed my measuring stick. So what if I priced the house in something else? Well, if I price the home in oil, homes are cheap. If I price the home in gold, homes are cheap. If I price the home in Bitcoin, homes are cheap. If I price the home in rice, homes are cheap. If I price them in dollars, they're expensive. So is it a bubble that needs to pop? I don't necessarily think so. I think if the entire market crashes, maybe the real estate market crashes with it. Otherwise, it could just kind of slowly trickle down. Interest rates going up 1%. I mean, what is it going to add? $200 a month onto a payment? Is it that big of a deal? Eventually, mortgage rates will affect the price because it's not the price of the home you buy, it's the monthly payment. So to give you an example, in 2007, I had a $1.5 million house and my payment was, I think, about $13,000. And today, $13,000 will buy you a $3.5 million house. So the same monthly payment got me 1.5 and today gets me 3.5 for the same payment. So it's not the price of the home, it's the monthly payment. Now the interest rate affects that. So as the interest rate goes up, the same payment buys me less and less of a house. So that's something to think about. But thanks for the tip, Kurt. Gorgie C. My only concern with Bitcoin is how it plays out if Klaus is to believe with. Oh no, we talked about the energy grid. Sorry about that. While I'm looking for the next question, don't forget to check out marketdisruptorslive.com. That's marketdisruptorslive.com. Look, man, the next 2 years are going to be the most influential on your entire life, your financial life for sure, and lots of uncertainty ahead. Now, if you aren't prepared, it could be disastrous, but if you are prepared, it could be the biggest opportunity of your life. So that's why I'm having this event. I wasn't going to have it till October. We moved it forward because right now it's so important. You need to come hang out with Luke Grauman, myself, George Gammon, Danielle DiMartino Booth, Harry Dent. Ask him why he's always wrong on your own. Shake his hand. Robert Breedlove and so many others. Dr. Joe Mercola. Check it out. MarketDisruptorsLive.com. It's pinned in the chat here. Let's see what else we got. Birds Allowed. How do we stop them from taking us into a fully programmable digital currency? Well, Birds, I think they're trying to get us into this, social credit score system, as I said, right, which includes a central bank digital currency. How we stop that is we need to wake up and push them out of power before that happens. It's a race. Can they install the social credit score system before enough people wake up and push back? And then again, that's the point of the fire. That's the point of the brush fires picture behind me. I'm trying to start brush fires in the minds of men to win that race. It's a war over information. We're winning the war of information. I'm a little channel. I appreciate you guys supporting me, but we got the Joe Rogans and the Tucker Carlsons that are crushing their mainstream media narrative. We're crushing them. We're winning. We're the majority. Stop being the silent majority. That's the point. Brianna says guns and ammo. Yeah, guns and ammo for sure. Ammo's good, right? So again, remember I gave the attributes of money: durable, portable, divisible, fungible, and so bullets definitely fit into those categories. I think it'd be great. I'm definitely holding some of my wealth in that. Gladiator says that nobody knows jack beep what will really happen in the future. Just a bunch of silly guesses, nonsense. You're absolutely right, Gladiator. We don't know the future. What we can do is we can use history as our guide, and we can use education, and we can use indicators, and we can assign probabilities as to what could happen in the future. And then using the information that we have available to us and the probabilities that we think would happen, we can prepare for different scenarios. So, of course, nobody's got a crystal ball. Sure would make it a lot easier if we did, but we can try to prepare the best we can. Now, the future is uncertain, to your point, Gladiator, and the way that we beat uncertainty is with optionality. So the more options I have, the better I'll be, regardless of what happens. And so, yeah, we don't know the future. We can certainly, you can sort of see the future a little bit. So I'm going to push back on that for a second, Gladiator. So we can sort of see the future for a little bit. So, for example, if I decide to start eating chocolate cake 5 meals a day, every single day, what does my future hold for me? Right? You have the law of sowing and reaping. If I continue to sow apple seeds, guess what the future holds for me? Apple trees. If I eat chocolate cake every single day, 5 times a day, what does the future hold for me? It holds obesity and heart disease and that, right? So actions have consequences. So to your point, Gladiator, nobody knows the future. Well, we don't know exactly, but we kind of know. So, for example, if the United States continues to shut down its energy sector and continues to fund terrorist nations and give them nuclear weapons, what do you think the future is going to hold? It's kind of apparent, right? So anyway, take those things into consideration. Juan Martinez says, why would we as Bitcoiners want the dollar to completely fail if it's a derivative and the reserve currency so far? Are they competitors? Juan, I don't necessarily want the dollar to completely fail. As a matter of fact, it's going to be catastrophic for a lot of people, and I don't wish that on anybody. Our best bet is that it continues to kind of fade away slowly, and people can transition peacefully into a new system. But ultimately, what we do want is we want to take away anyone's ability, the Fed's, the government's ability to print themselves more money, and then to use that newly printed money as a weapon. That's what we do want to print. I don't like what they're using the money for. And if they didn't have a money printer in their basement, they wouldn't be able to do those things. And so ultimately, that's what I'd like to end. Sauce says, if you're trying to build your wealth starting from scratch today and have a tolerance for risk, how would you structure your portfolio? Well, Sauce, if I was trying to build my wealth today, which if you know my story, I made a bunch of wealth, multiple 8 figures, and I lost it all, and I had to build it again. So I've done it more than once, unfortunately. What I would do is not focus on your portfolio, but I'd focus on building wealth or creating wealth. So how do you create wealth? You create wealth by providing valuable goods and services into the marketplace. So focus on creating wealth first. Then how would I structure your portfolio? Well, if you're young and you're just starting out and you're risky to the criteria you've laid out, I think Bitcoin's the best risk-adjusted bet you can make. And it might take a long time. It depends on what levels you're looking for. I think we could see a 10x in the next couple of years. For some people, maybe that's not enough, Potentially gold might do a little bit better in the shorter term, we don't know. But I think if you're young, you have time, you want to make some big bets, I think Bitcoin could be one of the best risk-adjusted ones you could do. If you're a little bit older, I might advise, and you had more money, then you have to start thinking a little bit more defensively. And so then maybe you want to start kind of diversifying that money, putting some into cash flow assets and things like that. Ace's Cafe gave me a tip just so he could correct me on saying Weimar Republic. Okay, it's Weimar. Weimar Republic. Is that better, Aces? Thanks for the tip. By the way, if you haven't already, check out the Market Disruptors Live event, marketdisruptorslive.com. It is going to be an event you do not want to miss. The last one last year was off the hook. It was off the hook good. 1 day of workshops. Learn how to build cash flow so you can quit your job, find a new career, or just retire. A workshop on exactly how to do that the fastest way possible. Another workshop on how to buy real estate for cash flow as well with a single one-time investment and within 10 years be retired. Another workshop on how to protect your assets and how to reduce your taxes. Those are 3 workshops. Cody Sanchez, Casey Chowan, Jason Hartman. And then we have the speakers. I got Joe Brown from Heresy Financial coming. Yeah, probably a lot of you guys watch his YouTube channel. Daniel DiMartino Booth from the Fed. Luke Grauman, George Gammon, Harry Dent, Jeff Booth, Greg Foss, Lawrence Lepard, Dr. Joe Mercola, and so many others. There's a link down below, marketdisruptorslive.com. And with that, I think we're going to go ahead and wrap it up. I've been on for a long time, and no one's tipping me anymore. So I'm kidding. I got through a lot of questions. I thought I'd go for about an hour, and I've gone almost 2. And I've already done radio for 3 hours today. I've been talking for too long. If you don't listen to me on the radio, by the way, you should. You can just search Mark Moss iHeart, and you can find the radio stations that I'm on, or you can check it out on the podcast. Just search Mark Moss Podcast, and you'll find it there. And with that, we're going to go ahead and sign it off. Thanks for hanging out, and tell me in the comments if you want me to do more of these. If so, we'll try and do more of these in the future. And I guess with that, to your success, I'm out.